Hello everyone, I welcome you to today's lesson, and today we are going to go deep into financial environment and goals of financial management. This is an in-depth guide for understanding business and financial student students under that category, those people that are doing business or finance, and even early career financial professionals. So this lesson is so good for you, and it's better you pay adequate attention. I'm Ben Nyanzi, and I'm going to take you through. So, what is financial environment? Where is financial environment applied? So, financial environment is just this is an interconnected ecosystem. So you find that it is connected everywhere in our institution. In what we do, we will find that we have financial environment. So financial management doesn't operate in a vacuum or a space without air or just anyhow. So it's a deeply embedded within a broader environment, a complex ecosystem of markets, institutions, instruments, and regulations that collectively guide the flow of capital. Understanding these components is a fundamental for effective financial decision making. One of the aspects in this ecosystem is financial management. Financial markets, you find that we have platforms for raising funds and trading assets. I have my shop, you have your shop. So what are the things found there? What are those assets? You find that's one of the part, or that's one of part of financial ecosystem. We have financial institutions, banks, microfinances. This intermediary connects savers and borrowers. People that need money and people that keep money. You find that they use these institutions so much. Financial instructions. These are constructs, projects that representing financial values and claims. And you also have financial regulations. These are rules that govern the investments of financial plans. So they ensure stability and investor protection. So navigating financial markets is simple. Let's talk about it. Financial markets are the areas, or are the this is where capital is exchanged or categorized by maturity of funds traded. How much do I have? That's how we can categorize financial market. So financial markets focus on short-time funds, basically less than a year. For example, treasury bills, commercial papers, certificates of deposits. And you find that we under that category, people that utilize it, we have banks, large corporations managing liquidity. Then we have financial market, and then we have capital market. Capital market basically based on long-term funds. Those one takes more than a year. And money markets, those are short-time goals. For example, in the capital markets, you have shares where security are exchanged, securities like that. So the real world impact is when MTN Uganda lists shares to the stock market. It's a capital market in action, enabling long-term investment. It's not a money market, it's a capital market. So financial institution and instruments. Financial institution, these ones are entities that facilitate the flow of money, acting as crucial links between surplus funds and those we need. So you find that these people, these institutions, for them they handle money, deposits, accepting deposits, providing loans, offering risks strategies, or we can overcome risks, things like that kind. For example, we have banks, insurance company, pension funds, stock exchange. So you find that all those platforms, all those areas or entities, they are real examples of financial institutions. Let's talk about stock exchanges. Stock exchanges, they provide organized platform for buying and selling various securities. And then you find that pension funds, they invest retirement savings. You find that, let me save like NSSF, we have pay as you earn, or they find that new government workers, they have their own whatever. So what you get, you pay something or you invest in something for your retirement. Then financial instruments, these one construction of like contracts of value, like equity instruments, debt instruments, hybrid instruments, and liability. So you find that these areas, these instruments are so good in contracts of value, whereby they are used in contracts management. So you find that it can be a good venture or a good area in financial management. Let's talk about financial regulations. The regulations are established to maintain stability and prevent fraud and protect even investors within the financial system. Have central banks. Central banks in religious countries, like for us here, we have Bank of Uganda. It controls monetary policy, supervises commercial banks, and ensuring financial system stability. For example, our Bank of Uganda regulates local financial institutions. Security Exchange Commission (SEC). These one regulates stock markets, ensuring fair trading practices and investor protection. In some regions, you find that they are role falls in capital market authorities. We have international regulations gathering from bodies like World Bank, Basel Community, that promote global financial stabilities and best practices. You find that those are regulations. Let's talk about goals of financial management or evolution from foreign market. Traditional goal is profit maximization, and modern goal is wealth maximization. So we find that traditional goal, someone is best to get profit, but in modern goal, someone is based on increasing his wealth standards. So traditional goal is a simplest objective. Well, it increases net income. But you find that modern goals, it maximizes shareholding capacity or shareholder wealth, increasing the firm value. So other critical goals must be or might be ensuring liquidity, promoting long-term sustainability, upholding corporate social responsibilities, and balancing stakeholder certification. So we find that if you look into those goals and then you follow them, you can easily categorize where you are. Even you can determine yourself, where am I? Let's talk about stockholders in financial management. Those are the owners, stock shareholders, employees. Because the employee find that they expect fair pay, job security, and the opportunities for development. Have customers, have communities, stock societies, have government and creditors. Creditors, those are banks and money lenders. You find that these are stakeholders in financial management. We need them in financial management. There is no way you can go wealth and wealthier when you don't have such people. The agent's problem. The agent's problem is a critical challenge in financial management. And this arises when there is a diverse of interest between a company owner or principals and its managers or agents. Agency problem occurs when managers make a decision that benefits themselves rather than aligning with the best interest of the shareholder. When I'm starting my company, I have my own interest. So if I bring you as my manager and you base on your interest rather than my interest, then that means we shall fall apart. What are the common examples? Managers awarding themselves excessive salaries or investing in their own benefiting projects that boost their own income or their own image, but are than limited to the shareholder. That's one of the living examples. So what are the solutions? Typing managers compensation for companies' performance. You put in place that managers should receive such and such benefits and should do this and this and this. So that one, it will help us to increase income. Robust corporate governance, implementing strong board of directors, overseeing and independent communities. Monitoring and classify. So have to monitor your company. If you don't monitor your company, just the managers will take an advantage to do their own things depending on their own interests. So so let's talk about ethics in finance. These are moral practices. These are moral practices that guides financial decision and practices. These they can be set by you or they can be already in place. Why this matters? They build trust, they prevent misconduct and ensure long time performance, and they avoid crisis even running bankrupt. So if we promote this, you find that it will be rare for someone to go bankrupt. So accounting scandals can be demonstrated on how unethical behavior can destroy investors' trust and even lead to corporate fall down. So find that if we follow proper ethics in financial management, we shall be in business for some good time. But if you don't follow them, it's rare for you to be in business. So let me give you some real life applications for your own benefits. Let's understand financial environment and adhere to the modern financial goals. Integrated environment. Financial management is shaped by markets, institutions, instruments, and regulations. So, wealth maximization. The primary goal. This is the primary goal. Creating long-term value for shareholders, considering risk and time. Stakeholder consideration. Financial decisions must be balanced the interests of the owners, employees, creditors, customers, government, and the community. And they also put in mind your ethical foundation. What are the ethics and stock governance abilities that will make us succeed? Let me give you a practical example. A financial manager might need to balance paying my favorite balance, like paying shareholders and retaining earnings. What will I get as a manager, and what am I supposed to pay the shareholder or the owner? So if you might find that people get problems balancing those things, and they end up complying with the market regulation in stock listing. Thanks for your time. Let's meet again in the coming lesson. Thank you and have a nice time.